A couple of weeks ago, we highlighted some of the nation's weakest performing apartment markets over the past 5 years, and it probably wasn't a surprise to many of you to see Memphis on that list. And today, we'll dive in a little more to what is happening in the Memphis market. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Memphis update. When we talk about Memphis, we often talk about how this is one of the most bifurcated markets in the country, an extreme performance gap between top-end and low-end product and top-end and low-end submarkets. And we'll get to that in a little bit, but I want to start off with some overall numbers in the Memphis apartment market. Overall occupancy is still in very bad shape at just 91.1%, and it was down 120 basis points year over year. Not good to see backtracking like that for a market still very much in recovery. And the entirety of that year-over-year decline traces to a sharp drop in Q4 2012 when occupancy dipped 190 basis points. We've seen some uptick since then, the first half of 2013, but not much, up just 40 basis points. And at 91.1%, Memphis ranks dead last for occupancy among the nation's core 100 metros, just behind nearby Little Rock at 91.2, and also behind Tucson, Atlanta, El Paso. And there are only 4 other metros among the core 100 markets that have rates below 93% as of Q2. Those were Las Vegas, Indianapolis, Columbia, South Carolina, and Jacksonville. But bifurcation, sharply different story depending on where you are in the market. You could see rates are actually healthy in the 2 key submarkets of downtown Memphis and Cordova, Germantown, Collierville. These are by far the metro's most expensive and most exclusive submarkets. But in the 4 lower price submarkets, and they're significantly cheaper, we have some terrible rates, all between 88 and 90%, and they've been in that range for quite a while now. Now let's take a look at rents. Not much growth. Rents up just 0.9% year over year through Q2 for Memphis overall. So Memphis is a market that has really seen rent growth levels slide in recent years since reaching a peak of high 3s back in 2011. But those hikes never looked sustainable given how bad occupancy rates were, and sure enough, they dropped off. Now, what's interesting is that the performance premium that we saw for those top 2 submarkets on the occupancy side really isn't translating to the rent growth side. Now, downtown Memphis did pretty well with growth of 2.9%, but Cordova, Germantown, Collierville recorded a bump of just 0.6%, and there are not very attractive numbers in those lower price submarkets either. Now, why is that? Why aren't we seeing better rent growth, especially in the key eastern suburbs of Cordova, Germantown, Collierville? And one big problem for the Memphis metro overall is demographics. The demographic story has been a big reason why the apartment market nationally has done so well in recent years. But among markets in the South especially, Memphis is one of the few markets that really hasn't benefited much from the surge of Gen Y renters that has boosted many markets nationally. In Memphis, we've seen very limited growth in that key 20-something demographic that's so important to the apartment industry. And as home sales have rebounded, and homes are relatively very cheap here, Memphis is one of the few markets that's really struggled to backfill units vacated to purchase simply because demand is so limited from that key demographic. So that's particularly an issue in those key eastern suburbs, which is why you see the operators are really pricing to keep occupancy in pretty good shape, really limiting rent growth though. And unfortunately, we really don't see any signs that that story is going to change much over the next year. Job growth in Memphis has remained restrained, and the overall economy is still trying to regain its footing from the recession. So we're looking for that occupancy delta to remain quite significant among the submarkets, and we expect that rent growth is going to remain limited across the board. And that wraps us up for Memphis. So until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.